Evening, everybody. Welcome out to tonight's training webinar. This is the weekly webinar with Shade Foray. I've got Stephen Swenson on the line here with us as well. We conduct these webinars every Wednesday night, so we're always happy to have you join us here. Let me just get that so you can see. Perfect. Okay, Stephen, you can hear us okay?
I sure can. I'm excited to be here tonight. We've got a bunch of great things to talk about, and really excited to be here.
Awesome, awesome. Well, perfect. Well, as all the webinars, these are always recorded, so you can always get the replays after. If you have any questions throughout the webinar, feel free to ask questions at any point because it only makes webinars better, and it's one of the nice things about doing in this format is that we're able to take questions as they come up, and so it works out well for us. In terms of a topic and what we wanted to talk about, it's actually something that's becoming more and more important, I think, for the members and for everybody we work with that's buying things. Because once you begin to invest in real estate, one of the questions that comes up and the way that you really make money ultimately is due to your exit strategy. Steve and I talk about exit strategies a lot with each other, so we wanted to do a webinar tonight about exit strategies and cover a pretty broad swath of things you can do once you've acquired property.
Yeah, I mean, this is something we've talked about a lot in the past, but we really haven't focused on it because we've been helping people over the last couple of months go out there and start doing deals. And now we have a lot of students that are doing deals, that have done deals, and are now going through the process of selling their properties. And so we wanted to talk about some of those different exit strategies. What do you do once you've picked up a property, and what are some of the options to you from that, I guess, really at that point?
Yeah, I mean, if we were to define it, what exactly are we talking about when we say exit strategy? Because, I mean, the reality of it is every investment has an exit strategy. I mean, ultimately what we're talking about here is how you intend to make money from the investment. And so, I mean, if you're buying stocks, then you probably have some kind of a plan to, to cash out and to reinvest possibly. With a lot of investments, that's what your exit strategy is about. With real estate, though, because it's not liquid capital, you have to have an exit strategy and plan in order to get your money, to get your profits out of that. And so it's not the same as maybe your overall investment strategy either, because your exit strategy is something that can vary from property to property. It's really property specific. What we're talking about here with exit strategies is we're talking about an exit strategy for one specific investment. So you may have an overall strategy that you have, and who knows, you may have the same exit strategy with every property that you buy. But usually when we're talking about an exit strategy, it's something that is related to at least one property. And it's what we're talking about tonight is mostly related to property acquisition. Although if you were investing in liens, an exit strategy with liens is really more along the lines of reinvesting your money. Because you get a check in the mail, so your money is liquid again. It's you've got liquid capital again to reinvest. But with real estate, once you've acquired it, this is the exit strategy, the process you're going to go through to get your money back, plus your returns.
Yeah, exactly. I mean, really, the exit strategy with a tax lien would just really be, reinvesting, like you said, and deciding if you're going to wait or start the foreclosure process. Kind of the exit strategy is really almost something you determine before you invest into a tax lien based off of what your end goal is. Yeah, what we're really talking about tonight is property acquisition. So once you've acquired a property, be that through a tax deed or possibly even through a tax lien certificate, what are you going to do with it once you've acquired that property? And with an exit strategy, you may have more than one. As we go through tonight and talk tonight, you may, for example, you may offer off a building lot and offer both, to sell it as is, just turn around and sell it, or you may also offer seller financing. That way you're really, taking that property and now expanding the market or expanding your reach to people that might be interested in that property. So we'll go through and talk about all of these different strategies this evening, but keep that in mind as we're going through this. You might utilize more than one exit strategy to be able to sell your property.
Yeah, I think that is important to recognize. And in terms of when you should know this exit strategy, it is important to know it before the investment, really. It's something that you want to have in mind before you ever come up with the maximum bid amount. It's something that you should really know before, before you make any kind of solid numbers, because your exit strategy, part of what that's about is, oh no, can you still hear me okay?
Yeah, I can hear you. I can hear you good. I just can't see your screen. It's just black.
Yeah, I think my computer just like froze up on me here because I can't do anything. Like I can't move my mouse. I can't do anything here. Oh, there we go. Maybe I don't know. I don't know if it's gonna crash on me here or what. Let's
Now,
see.
now, now it came back. Let's see. I can see your screen now, it seems like.
Hopefully, some kind of a problem here. I don't know. Let me see if I can try to force quit this setup.
Well, as far as, let's say, it's kind of doing that, before you determine your exit strategy, you're going to want to ask yourself a couple of questions. I mean, just like Shay talked about, uh, you're going to have an idea of what your exit strategy is before you even purchase the property. In fact, you're really buying that property or investing in that property with the exit strategy in mind. At least that's kind of the way that we do it. I mean, when we're going out there and looking at tax deeds, for example, say we're looking at lower dollar building lots or a piece of land that we can turn around and flip, we're looking at that property with the investment strategy in mind, meaning, okay, we're going to offer this property at a discounted cost as an as-is sell. We may do it through a classified ad, plus we're going to do these other different exit strategies. So our end goal is really to be able to turn around and sell this property at a discounted cost, either as a quick lump sum deal, meaning we pick up the property for maybe 10-15% of its value, turn around and sell it for 30 or 40% of its value. So we're still giving a massive discount on that property, but then maybe we might also offer seller financing on the property. That way it gives us the option to be able to do both of those. And so before we even invest, we have an idea of what we're looking to do. If we're looking, on the other hand, something like a single family home that we plan on renting out, well then, we're going to look at those properties specifically. I mean, we may look for a property that doesn't need a ton of work. We may have to pay just a little bit more for it at the auction, but we're going to be able to walk into it and have it start renting out pretty quickly. And so as we're going through and looking at these different investments, that's really something that we're going to keep in mind, or that you're going to keep in mind as well, as you're looking at the investment. Kind of have an idea of what that exit strategy is before you even invest.
All right. Well, I think I've got it figured out here. I'm going to switch this over here. I don't know what was dragging it down, but hopefully it's done with now. Okay. All right. So there we go. A couple of the things here. Let me see if I. Okay. In terms of what we're talking about in duration, in terms like sometimes we're using different terms here because we're going to get into the specifics here on how you get out. But if you're wondering though, when we're talking about long term, short term, whatever, what we usually mean is when we're talking about flipping a property, that's usually something you're obviously trying to do right away. It's something you're trying to do as soon as you get the property, and so we're going to give that a time frame of maybe 0 to 3 months on the long end if for something you're trying to do immediately. But short term is generally going to be something that's less than a year, and long term is something we're going to generally be looking at for over a year. Um, that's kind of an easy way to break down the time frames that we're talking about when we talk about these different investments. And so, yeah, if you want, you can go ahead and start right here. So at the point here where a person has acquired, when you're looking to acquire property, is kind of the point where we're at right here, and some of the questions you need to ask yourself.
Yeah, and I think that was a good point that you made before about either, I mean, are you looking to flip the deal? That's really going to be, a really short term, or is it a short term within a year, or long term goal within that, over a year? I really think that makes sense. Now, really, when we're looking at a property, and we're going to really kind of the question that we're going to ask ourselves, are we looking to sell the property? We're looking to hold the property. And it may be a combination of both. And as we go through the hold strategies, you guys will see what we're talking about. But really, that's the first question every investor should ask themselves. Now, as I mentioned before, these can be offered as you look at a property. You may have both selling and holding strategies. You know, as I talked about a little bit earlier, you could list the property with a sign where you're doing that flip, but you're also offering it with seller financing, or maybe it's more of a long-term goal where you're looking to sell it for a little bit higher price, but then we'll also offer owner financing.
Yeah, you've got a lot of options when it comes to selling property, and the good news is that selling everything is easier than it used to be. In fact, it's way easier. The internet has made it so much easier to sell things that it's a completely different world, really, than it was 20 years ago. And the reason for that was prior to the internet, if you wanted to get something like a house listed, you had to rely on a real estate agent who would have who would have the catalog of listings that they could go through, and they would be working with a network of other real estate agents that had properties and also customers that were looking for homes, and that was kind of how it worked. It was like its own little networking model. But with the internet today, we all have massive networks now, and we have the ability to get massive exposure with any property or anything that we want to sell. If you wanted to post something up for sale today, you've got a lot of different options on ways that you can do it, and that's what we want to talk about and focus on, are all of the different selling options that you have, all the different strategies that can be employed and utilized when you're looking to sell real estate, because there are so many different ways you can do it now. So some of the ones we'll talk about are for sale signs, mail campaigns, social media, auction websites, classifieds, and realtors, real estate agents.
Yeah, exactly. I mean, each one of these, I mean, that's really that makes this so nice. When I first started in real estate, I was a brand new real estate agent in 1999. And even at the time, that was just kind of the beginning of the real estate market change. Before that, you really, you know, either just had a sign in your yard and was trying to be a for sale by owner, or you listed with a real estate agent or a realtor. And most people just listed with a real estate agent, and there wasn't a lot of ways to be able to sell your property. That's what makes today so much different. That's what makes this investment strategy, as far as tax sale investing, such a good strategy for investors. In fact, I was talking to my dad last night, and I was saying, I really think we can make the case that the tax sale investing is the only investment strategy that somebody needs, because number one, they can invest large amounts of sums, making high interest rate returns, and number two, they can get property for a fraction of its value. So if they're looking to get involved in real estate, they have that ability. If they're looking for interest rate, they have that ability. And most smart investors want a combination of both. Or I guess most long-term investors, the full retirement is going to be a combination of both of them. And so the first thing is a for sale sign. Really, this is something that we, as investors, when we're trying to sell property, once you've picked up that property, you cannot take away the value of a sell sign. I guess I said that wrong. Really, the value of a for sale sign is incredible. I mean, in talking with my uncle and my dad, they've been developers and have been involved in real estate for a long time, and they have always told me that the number one way they have sold property, and they've sold property every kind of way you can imagine, is by putting a sign in the yard. And the reason is because many times real estate sells to somebody within that neighborhood, somebody within that area, somebody who knows somebody who's looking for that piece of property, or who would like to get a property within that area. And so putting a for sale sign in the yard, is going to be the first thing that many investors are going to want to do. That you're going to want to put a sign in there with your number so that people can start contacting you, and each one of those people that contact you is now a lead, is now a potential buyer. This is somebody that, even if you don't sell them this property, you may be able to sell them a different property, and so you're going to want to cultivate anyone who contacts you and see if this may be something that you can work out a deal with them. And there's a lot of ways. I mean, even if you're out of the country, or excuse me, out of state. So say you're listing a property in Kansas or somewhere like that, and you live in California, you can easily find somebody on Craigslist, that you can pay $30 or whatever and send them out a sign, and they'll go ahead and put that in in the yard for you, and could take some pictures for it. Now you've got a picture with your sign that you can put online, and not only that, you're also going to have all of that local traffic. You can put seller financing on it. You can put whatever this on the sign you want, but that's going to be the local traffic there is going to know that the property is available, and you can't replace that with anything else. Even online ads, nothing like that. Nothing is going to replace the for sale sign. So it's not something that we ever want to overlook as tax sale investors. Even if you're just selling a building lot, putting a for sale sign in there, everyone who drives past that is going to know that it's for sale. So I
Yeah,
think that, that's kind of, I can't overstate the importance of it, I guess.
yeah. I think it might seem like a quaint thing to do, given all the different ways that you can advertise today. But the reality is that it's one of the more inexpensive things that you can do that tells everybody around that this property is for sale. That's it's kind of I think it's one of those first steps. Anytime you have a property for sale, there should be a sign in that front yard, notifying anybody that comes by that it's for sale. Because, like Steve said, your most likely buyers initially are going to be locals. So, I think it's always going to be a good idea, and one of the first steps that you should take.
Yeah, the,
And
the only the only time you would need a for sale sign is maybe if it's some landlocked property, or like some big huge country property. If there's a main road or any type of road going past the property, you're going to want to put a for sale sign there to let everyone know that the property's for sale.
Another way that you can sell a property is by contacting the neighbors in that area. Luckily, when you're going through and purchasing a property, part of your due diligence is going to be to locate the property record for the county, and the county also has property records for the surrounding properties. In fact, there's a tool that we use, a lot of websites that will show you some of the surrounding neighborhoods and the surrounding areas. But the idea here is simple, and that is to get the names and addresses for people in that neighborhood and to send out some form letters that you can send out to people, letting them know that the property is available and is for sale. In fact, it goes along with something we've talked about in the past, which is selling to adjacent property owners when you have pieces of land. Land oftentimes may only, I mean, it may be most valuable to adjacent property owners or to people that are right there close. They may be the ones that are most likely to purchase it because it's such an immediate, there's so many immediate benefits for them to buy that property. But you'd be surprised on what kind of traction even letters can get, sending them through the mail. People still open their mail up, and if they see an opportunity to buy a piece of property that's close to them, they'll oftentimes jump on it.
Yeah, absolutely. In fact, just to kind of tell you, one of our students, Ronald, he actually just sold a property using this exact method. I'm sure you guys probably saw the property that he purchased that we put up a couple of weeks ago. That building lot, he picked up for $36. He was able to send. That's all he did, is he sent out a few letters to the surrounding property owners. We had talked about this with him, and we helped pull up those names, and he just sent those out. And one of the property owners is going to buy it. They're going to do he's going to do essentially seller financing, $600 down, $200 a month, and it's going to sell for anywhere between $1,000 to $1,500. And so that, I mean, yeah, you're talking about a small deal. Sure, it was only a $36, and sure, he's only selling it for $1,000 or $1,500. Either way, you're talking about uh, an incredible return on your investment. And all it did was take a matter of sending out a couple of letters, and he was automatically able to sell that property. Well, now he's just, had 1,000 type return, and he can do the exact same strategy over and over and over again. And any investor can really do this in most of the markets across the country.
Something to keep in mind as well is that you're buying property as a wholesaler. You're buying it in a way that very few people understand or know even exist. So you're buying property for dirt cheap prices, as low as you can find. You will not find real estate prices any cheaper anywhere than you'll ever find them with tax sales. So you're buying them at such a low price, and price dictates the sell. every time. Price is always the most important thing. People know real estate's worth money. You'll be able to offer real estate for less than anybody else can offer it to them for. I mean, like for instance, I mean this example with our member is a great example. I mean, about a month ago, he bought this lot for $38, and within a month here, he has been able to sell that for an incredible return. I don't know that I don't know if there's any other way that you can do this kind of stuff. I mean, it's essentially what he bought. It's like it's a land giveaway. When you buy property for $38, there is no monetary value in that. The county is simply trying to get somebody to pay the property taxes. They just want a new owner in it. And so, fortunately for us, we're the people that can purchase that, take advantage of it, and get a permanent owner into the property. Because the reality is, the county doesn't have the resources to do that. The county would love to be able to sell to the eventual owners of all of this property, but they're not set up to do that. They're set up to conduct their tax sale, and they rely on investors to make sure that that happens. So, when you are selling this property, keep in mind that you're going to be able to sell it for better prices than anybody else will be able to sell, and that will be a huge buying factor. If you were trying to sell this stuff for full market value, then you might have to get kind of creative when it came to different things you would do because you're competing with everybody in the market. But if you're selling property for a huge markdown, if you're selling it for 50% of what it's worth, well, then there's only a handful of properties, that will be able to compete with you because nobody is giving away property like that. So I think that your price is going to make this easier than you think because your price gives you so much flexibility. And it gives you that flexibility because most people are paying full price for property. So when they pay full price for it, they're looking to make a little bit of a profit here. You're paying 5 to 10% on the property and looking to make a profit, which is pretty simple to do.
Yeah, yeah, exactly. I mean, and you could even look at that, in on Ronald's deal and say, okay, well, maybe the property's worth 4 or 5 grand. That's leaving money on the table, but you've got to look at it from an investor's point of view. Suddenly you've put a property owner in there, you've got a massive return on your money, and now you have a residual income. And if they don't pay you those final payments, you can go ahead and just go ahead and resell it. So you're really in a win-win situation. And in that scenario, also you're selling it to somebody who needs the property, who wants the property. There's no better scenario than that when you're looking at it from an investor standpoint, because why sit on that property for 6 months to a year to try to get a couple more $1,000 when you can take that $1,000 and go buy 10 more properties?
Yeah, yeah. In fact, it's also important to remember that rental income doesn't necessarily mean that it has to be coming in from some type of a single-family home or a property with a structure on it or anything like that. You can create income in all those different ways. You can have a property that you rent out, or you can offer owner financing. In a way, it's still generating that monthly income for you, and so you've got some options there. Social media is another great way that you can sell things. And you can begin to build yourself up. In fact, I think everybody should be building up kind of their social media side of things, especially if you're looking at this from the perspective of an investor. You can build up your social media right now while you just with friends, people that you know, but you basically build up a huge network of people that you have the ability to touch at any point. If you want to sell something, you can offer that to them. You begin to use some of these resources that are available online and some of the contacts that you make, and really Facebook, Twitter, YouTube, all of those tools just make it easier to network. That's really what they're about, is about trying to network with people so that you are in connection with the right people. And when we talk about the right people, what do we mean? So that you are in connection with buyers or with sellers if you're looking to buy. The point is to get those people surrounding you that will help you achieve your goals, and that's really what you're trying to do here with social media is to be able to offer things to those people around you. So social media is a free resource, and it's one that only seems to be growing in popularity. In other words, there may be a point in the future where businesses will have a hard time even surviving if they're not involved with social media in one way or another. So I think it's a good idea to start something like this, whether or not you have property to sell right now, because at some point you will have property to sell, and your social media outlets would be a great way to offer them.
Yeah. I mean, I think that Shay brings up a good point. I mean, set up a Facebook page, a Twitter page, a YouTube page, to be able to offer things. In addition to that, connect to us. And then if you do have properties for sale and you do something like a tweet or a Facebook post, we can go ahead and repost that and market it to everyone that we're connected to. What we really want to build here is a community of investors all across the country. And so you getting set up on social media, I mean, it's something that me and Shade probably should have done, in 2006, 2007, but it was something we really kind of avoided until the last year or two. And we've kind of had to suck it up and we've started getting involved with it and we've made a lot of friends that way as well. So
Yeah, but we
we're,
really hate social media in reality. I mean, you don't have to love social media to do it. That's one of the things that we've learned lately too, is neither of us are really, it's not really in our nature to do like selfies and to post stuff online, and all that stuff just is not us. Not neither one of us really, but you don't necessarily have to love that to reap benefits, from its use. I think it's just worth stating because I'm sure there are lots of people that are probably already into social media, and there are some people that probably aren't for the same reasons why we never got, involved with it before, just because it wasn't really our thing. But there are benefits, even if you don't love it, you can still use it.
Well, it's a great resource of information. That's really what it comes down to. I find all kinds of interesting information that I probably wouldn't have found through some of these social media websites. And it's also a great way to be able to offer properties and to be able to connect to other investors because there is a ton of other investors that are doing it. And so to be able to tap into it, really, I think it's a little bit difficult to not have a thriving real estate business without being involved in social media to some extent.
Yeah, I think it is pretty well just becoming a requirement. Um, there we go. Uh, Another source, and we've mentioned this briefly, but there are many of them out there, and that are auction websites. There are a lot of auction websites out there. In fact, there's far more auction websites out there than you probably realize. But the biggest companies like eBay is a humongous auction company that can give you a ton of exposure. But there are others like Bid for Assets is another online auction company. These online auction companies give you the ability to sell something easily because they've got a platform that's already set up to sell property real estate. They already have a huge base of people. They've already done all these search engine work so that their websites pull up, and your listings will pull up if you post listings there. All the work has essentially been done. All you have to do is sell there, and they have eBay. I don't know what they is it about 10% roughly is about what they charge if you sell things there, which is going to be pretty standard for a lot of the different things you're going to try to do. I think is eBay about 10%? Does that seem right?
Yeah, I think it'll kind of depend on the auction service. They can range, from smaller ones of a few percent up to, 12 or 13%, just kind of depending on the service and what you're selling. But when you're looking at it, you're looking at it from an investment standpoint, what you can sell it for. Also, with things like eBay and stuff like that, you can also even offer seller financing, where people will sell a property on eBay, for example, like a building lot, and they'll have the bid amount be the down payment. And so essentially, once the buyer is essentially bidding on the down payment amount, and then they're seller financing the property from there. So essentially, they're getting that down payment, and then they're starting that person on a $130 a month or whatever the amount would be depending on the property, and really acting and just selling it as seller finance. And so that's another great way to be able to sell property through seller financing is through some of these auction websites, Bid for Assets, and there's a ton of other smaller, different types of land auctions and different types of auction websites that you can list your property on and get exposure. And some websites will charge if you sell it, some will charge if you don't sell it, so you can kind of list it depending on what your end goal is.
You know, in terms of the seller financing too, that's not something that's difficult to set up. If people are unfamiliar with something like that, it's really as simple as finding finding an example agreement online that you'd like to customize yourself, and to download that. You can set up a system like uh, DocuSign, which is like one of the programs that we've used a lot in the past, which is something that people can sign documents online. In other words, it's something that's pretty easy to do for out-of-state buyers, and because you are the deed holder to the property, you're really never at any risk because you determine, when you transfer title, you determine, in other words, you are in a safe position because your investment is real estate and you own it, and so you've got those options there. There's nothing that can happen with the property. Meaning that the property is always going to have that value. It's not like the stock market where one day it has value and the next day, it doesn't. That can't really happen with real estate. And so, you've got so many different options there, and setting up things like owner financing are just as easy to do over eBay as it would be locally. In fact, in some ways, it's probably almost easier to do it online than it would be locally because you don't have to go anywhere.
Yeah, I mean, one thing you can always do, and it's something that that we always do, is we go on and we look at example after example after example of people that are offering owner financing to get an idea. So, for example, if we purchase a building lot and it's kind of a new area, we're not sure, we're going to go on eBay and try to find similar types of building lots and find out how they're selling them and how they're offering for sale and how they're structuring the payments to get an idea of how you're going to do it. The best way to figure out how something is done is to do it, is to find somebody who's successful at it. So if you find somebody who's selling a ton of property on eBay and selling building lots or homes or whatever it is, you can kind of figure out how they're selling and structuring their deal, and then you can essentially do the same thing.
In fact, this stuff is so simple, and there are already people that are out there doing it. Like Steve and I've said, we've been teaching this stuff for a long time. There are people, if you go on to eBay, you can find people that are selling real estate, and you can tell, there's not a lot of them, but you can tell which people are picking them up at tax sales and which people aren't. And do you know how you can tell it? By the price. You can tell it by the price every single time because the people that are not picking this stuff up through tax sales are generally trying to get a lot more for property than the people that do. And that's probably one of the fastest ways. You can also tell sometimes by the type of property that it is, but yeah, oftentimes you'll go out there to look, like Steve just said, and looking at other sales that are taking place. It's a good indication of what's possible, of what you can expect going into an area, and really what you could sell properties for. But they don't have to be expensive, nice properties. It is one of the remarkable things about tax sales is that you can spend a very small amount. I mean, you can spend $38, or you can spend $38,000 or $380,000. The price doesn't really matter. You can find good investments at every price range. So it's remarkable in that way. Classified websites, classified ads, which are now on websites, they were kind of the original, the original local advertisement, and they still work incredibly well for a lot of things. In fact, there are lots of things that probably sell easier through local classified websites than maybe any other way. Like for instance, we live in Utah, and Utah has one specific classified service that probably is more successful than any other classified service in the state, and it gets the majority of the traction. And it's a good place to list and sell things to people in the area. Most areas have something like that, where you've got some kind of a classified source online. It might be through a local television or news network. It might be Craigslist. That might be the main one that people use in your area. But if they don't use Craigslist, they probably have something else, something like it. They're oftentimes free. You can have paid stuff there, but they're oftentimes free, so it doesn't cost you anything, and you can put up multiple ads in multiple places. That's another nice thing is that you can take the same advertisement and basically post it 100 different times, through different classified websites. So you're only doing the work of creating it once, and then the rest of the work is just posting it, multiple times so you can get that much more exposure.
Yeah, and there's dozens of different real estate classified websites that you can find online. There's some that may have a higher traffic that you pay a smaller listing fee, but it markets the building lots to a large audience. So, classified ads is something, I mean, just like Shade said, putting a sign in the yard and classified ads was the way to sell real estate 25 years ago, and having a realtor. Those were your real three options. There was maybe a handful of for sale by owner magazines and things like that were distributed, but that was really your only source, and it's still a good source. And what you'll see is a lot of these selling strategies are going to be ones that you may use several different strategies. So you're going to put a sign in the yard. You may put a classified ads. You may offer, you may do several different of these same strategies within to sell the property.
Yeah, I think that's another good point is you don't want to put all your eggs in one basket with anything. When it comes to selling, you don't want to just count on one thing and figure that's going to be good enough, even though it may only take one thing to sell it. The idea, though, is to get many of these systems in place so that you're getting maximum exposure. The idea is just to simply get that advertisement in front of as many people as possible. And yeah, that's something that is just getting easier and easier because of all these different online sources that we're finding now that simplify the whole process. Um, Now, in the past, we've also talked about putting together a power team of people. And we've said that that power team essentially grows as the need arises. So as you purchase real estate, you end up needing additional people to help you through the process, whether it's the process of evaluating it, selling it, and one of those people will undoubtedly be a real estate agent. A real estate agent you can use to sell all different types of property. You can sell through a real estate agent. Most commonly, people sell through real estate agents with warranty deeds. Meaning that once you've taken a tax deed through the quiet title process, and the tax deed receives a warranty deed, then you can get title insurance on it, which means that the property can be sold to somebody getting a loan on it. So any lender will borrow on the property. It's not the case with all real estate agents because you can certainly work out deals. I mean, real estate agents just work for money. So if you can work out separate deals with real estate agents, but they also tend to kind of specialize in different types of properties. So you may have some realtors that specialize more in land type deals, or maybe deals without a warranty deed per se. But most commonly, most realtors are going to be used to selling stuff with a warranty deed. I would say that's probably the most common thing that they see. So it's something you'll want well, I guess if you're working with a realtor, at that point, they should probably understand and know. In other words, you wouldn't want to just buy the taxi and try to list it with the realtor the next week because the realtor needs to understand that it's a tax deed and that it's not a standard property with a regular title.
Yeah, and that's something you'll probably have an idea, even really before you invest in the property. So let's say that you're investing in Florida and you bought some $200,000 home and you ended up paying, 25, I mean, you end up paying 35 grand for it or 40 grand. In a property like that, you may want to get top dollar. And so what you're going to do is it's going to be worth it to take it through quiet title over the next couple of months, clean the property up and then list it for sale. And as it's going through that quiet title, you could essentially, list it for sale before the sale happens because the quiet title will happen, but you can also get quiet title insurance. So it's going to depend on the deal that you're working with. If you're just selling a piece of land like Ronald did, you're not going to need a realtor. It's just kind of a face-to-face sale. There's enough ways to be able to sell that. And so usually you're going to use a realtor in the more higher dollar properties because going through quiet title can cost $1,000 to $2,000, and so you know depending on how much that property is worth will depend on if you're going to use a realtor in that investment strategy. And you'll have an idea of what that's, if you're going to do that really before you even invest in the property. You'll think, okay, this is a property that I'm going to try to put on the market to get top dollar.
Yeah, I think it's also important to mention that some properties are going to work better with certain exit strategies than others will. Each property is kind of unique, and in fact, if you kind of know what your exit strategy is going into the investment, you'll end up being attracted to those investments that are going to work best for your specific strategy. Meaning that, if your strategy is to simply buy and flip property quickly, so if you just want to buy the property and your objective here is to sell it quickly, that's probably going to happen through another investor. So what you're doing is you're selling that property as is. You're not doing anything separate with the deed. All you're doing is transferring title. You are just, that's the only thing that needs to be done in that situation. So it's very simple. It's easy to do. But the downside of that is you get less immediate cash. So your returns are going to be less because you're trading off for the time factor and for the ease of the transaction. So you could sell the property. Let's say you could flip it real quick, and maybe you get 40% or 50% of value for it. If you were to, on the other hand, hang on to it for long enough to get quiet title or to go through the quiet title process, which that could take 2 months, it could take 6 months. You're not really sure, but it's probably going to be somewhere in between those. But if you get quiet title on the property, then suddenly you don't have to sell it to an investor because you've got a warranty deed on it. So you have that option to sell it through more traditional methods. Both of those people still have the goal of just simply selling the property as quickly as they can, but on the one side, you've got the person that's going to flip it over immediately, hopefully within the week, versus the person that is willing to wait for 3 to 6 months to go through that process, is willing to put out some money, to get through quiet title so that they can sell it for full market value. So yeah, they have the same goals, but one of them decides to sit on it for maybe another 6 months, and put a little bit of money into it so that they can sell it for more down the road. Or you could decide you want to hang on to it long term. You want to hold it, which there are real advantages to that as well. In fact, one of the advantages to long-term strategies like that is that not only are you making money through rental income, or through, if you're doing something like owner financing, something like that, but ultimately the longer you hold on to the property and still have the title, the more you're going to earn on the property's appreciation. So you can be earning money in more than just one way. You can have money coming in through rental income or through whichever way you're financing it, and the property can also be going up in value, as the time goes on, just like all the other properties do. So it's a really good way to make a lot, but you would want to know that going into it. So if you're looking at the property, like we said, all of the properties you buy may end up, you may be looking at the same exact exit strategy with all of them. You may be deciding, okay, I'm just going to keep doing this same thing over and over again. But you'll find that there are some properties that work better for things than others. For instance, if you want to rent out a property, then what you're looking for in the tax sales is the property that's closest to being rentable. If that's what your objective is. But like we said, it doesn't have to be a single-family home in order to generate monthly revenue. And that's what some of those other options that are out there. And so you've got several different ways that you can sell real estate, and different time frames here. Let me get back down here to where we were.
Yeah, I mean, that's really a great way to break it down. The flip is that 1 to 3 months. You're trying to sell it quickly and get it, sold within 3 months. If you're looking for that short-term strategy, that's if you're looking for maybe something like quiet title or working with a realtor. And then the long-term strategy is where you're really going to be sitting on the property and going over some of these holding strategies. So we talked about the selling strategies. With the holding strategies, the first strategy is hold for appreciation. We'll talk about rentals, seller finance, lease option, and also a land lease option that me and Shade is something that we're going to be looking at over this next year as well. So I want to talk to you. We want to talk to you guys about that as well.
Yeah, I think for each one of these, they all have something in common, and that is that they're all designed to make money on the property. Some of them are designed to, I mean, the appreciation is something that's going to come naturally with time. The rest of them are all ways that you can create immediate income, with the property, which is why they're valuable. These holding strategies are all really income sources here. Whether you're renting, selling, leasing the property, any of those is going to equate to money in your pocket every month. And that's, I think, what the goal for a lot of people is. They want to make a lot of money, they want to replace their income, but the way you really do that is by generating lots of smaller sources of income. So if you can sell a property and you can sell it in a way that is going to generate $100 a month in income, that is a home run, because there are just not that many ways that you can set up systems that will automatically pay you like that. And systems like that are ultimately what will make you rich.
Yeah, absolutely.
Okay, so we've talked a little bit about holding for appreciation. And what's funny about tax sales is that the reality is most people that are involved with it are looking to get their money out within a short time frame. But if for some reason, if they didn't, if all you did was just buy this stuff and just hang on to it, you would still make tons of money just based on the appreciation alone, because real estate is always going up in price, especially when you buy it at a tax sale, because the longer you hang on to it, the more money it's going to be worth. That's pretty well true of all real estate. But when you're only buying if you're only buying it for 10% of what it's worth or 20% of what it's worth, then you only make more. I think as that time goes on. Um,
Yeah, with really the buy and hold, that would be more with a specific property. Say you find a property that, at least for the tax sale investor, that you could see maybe there's going to be possibly building in the area, and this you can see some type of growth within the area or something like that. So you'd like to hold on to the property for a year or something like, and just kind of see where it's at. That would be kind of the more the short term, or just like Shade says, sometimes, I mean, really, if you're picking up a property for 2 to 3 cents on the dollar and the property taxes aren't that low, just sitting on the property after a period of time, eventually you get a warranty deed on it anyway.
yeah, yeah. The longer you own that property, the easier it is. The longer you own the property and you pay property taxes on it, the easier it is to get a warranty deed on it. And for a lot of people, just the value of the property itself is good enough. They'll just keep it in their portfolio so that they've got the value there. So they might buy lots of $100 to $500 to $1,000 pieces of property and just put them into a portfolio that they can essentially borrow against if they ever want to. That would also work equally as well for those people, and it's less hands-on for the people that just basically want to start picking up property and sitting on it. You pick up property and you sit on it, and eventually you're going to end up with a lot of money, because you're going to end up with a lot of property. Um,
Yeah, that's actually a great point as well. I didn't even think about that right then. Is picking up those properties and being able to borrow on them, using them as collateral for a loan or something like that. That could be a possible strategy as well.
Yeah, I think it's really popular among people that are trying to diversify their investments. They'll take a set amount of money and they'll just start buying up any kind of land they can, and they're not necessarily concerned about what type of land it is or what the story is. They just want to be sure that they believe the value is going to go up in the future, and that's true of almost all land. So there's not a lot of pressure with that method. They're not trying to create regular income. They're just looking for a place to park their money, and they can park their money there and basically allow it to kind of grow tax-free in a way, until they decide what they want to do with it. So in terms of a place to park your money, at least that's going to keep up with inflation and outpace it with property appreciation. That's if you were doing nothing else. But for people that want to create immediate income, you've also got the option here for seller financing, which is a great way to start to generate regular revenue. And the option of seller financing is only going to get more popular with time. And that's because there are so many people that are looking for a place to stay or for property that they can buy, and they may not want to go through uh, traditional financing options. So seller
Yeah.
financing is only going to get more popular.
Well, and this is something that you need to decide as an investor before is, are you looking to rent the property or are you looking to seller finance? And because both of them are going to give you residual income, but one of them you're retaining ownership. With rentals in the past, part of the problem was because most investors were buying the rental and essentially paying a mortgage on it. And so they were hoping to be able to essentially make a little bit of money each month. When you're buying a tax deed property and renting it out, if you're picking up the property for 10 or 20 cents on the dollar, that property could initially pay for itself within a couple of years, for within a year to 2 years. And so when you're looking at it from that, it's a completely different investment standpoint. In addition with that, you have residual income coming in every single month. With seller financing, it's going to be essentially, with a rental, you're going to be putting that in a property management's hand, and they're going to be taking care of any of the the payments and all of that kind of stuff. They're going to be able to do that because you have so much profit in the property. With seller financing, that's where the owner is essentially going to be doing that, and you're really acting as the bank. You're holding the deed and you're acting as the bank, but what makes seller financing nice is it doesn't just have to be on single-family homes or structured property. And, with rental, that's really what you're going to be doing is you're going to be renting something out. Somebody's going to be renting it, so it'd be a home or a mobile home or some type of commercial property. With seller financing, you can do it on literally any piece of property. It doesn't matter because you're just essentially acting like the bank for the property owner.
Have you ever seen the car lots, the little car lots like the buy here, pay here car lots? Well, those car lots, they make a ton of money. And the reason that they make a ton of money is because they offer the ability for people to buy a car. They don't necessarily have the credit to be able to go through and do it at other places. And so essentially what they're able to do is to offer that service, and then they make a killing. Now, they're not really all that ethical, I think, in how they do it, the uh, but what they're doing there, that is a sound investment principle there in terms of being able to offer something that nobody else can offer. And because the price you're paying, like Steve said, when we first started with real estate, people would talk about cash flowing properties. And when they were talking about cash flowing properties, what they really meant was that difference between how much they had to pay on that property every month and how much they could collect on it. And if you could cash flow anything on a property, that was a home run. That was great. Oh, look at this. You can actually, there were people that were buying properties that had negative cash flow, it was actually costing them money every month, but they still thought it was a good investment because, they had somebody living in it that was paying such a high percentage of what the overall bill was.
And they were hoping for that appreciation as well.
Exactly. They were hoping for the appreciation on the property. They were hoping to be able to if they could just break even on a month-to-month basis, then it was a good deal because they were making money on the appreciation and the mortgage on the property was getting paid down. But as a tax deed investor, you're buying these properties outright. You don't have to worry about any of that. So yeah, if you initially cringe about with the idea of having rentals, you need to get that thought out of your head because it's nothing like what you envision in terms of getting the midnight telephone calls, from your renter. That's not going to happen in your situation because you're not buying the property the way you are. Like Steve said, you're going to hire a property management company that's going to hire. They will manage everything related to the property, from things like fixes to things like getting renters into the property and collecting money on it every month. They'll handle everything. That's what you pay them 10% for. And 10% is an easy amount to pay when you don't have a payment to make on that property. Okay, so seller financing is awesome in that way because it enables you to take a small amount of money initially, which in fact I'd be willing to bet this is the only strategy out there right now where you can take this small of an amount of money, an amount like $100, $50, $500 or $1,000, and to be able to turn it into residual income. In other words, I don't think there's that many ways out there that you can buy something at this low of a price and turn around and be able to sell it for this kind of a return. I mean, really, what we're looking at right now with real estate seemed almost impossible years ago. But the way things are working out, it, it is now possible, and it's easier now than it's ever been before. If you could have bought property 25 years ago and turned around and tried to sell it for a profit, it would have worked then. Now you've just got so much more exposure. Now it's just so much easier to get rid of things like that because you can offer it to so many more people.
Yeah, and what's great about tax sale investing, I mean, we've been involved with it for over 15, 16, well, 17 years, a long time. A couple more years will be 20 years we've been involved with this. And, having the fear, was everyone else going to do this? No, everyone else isn't going to do this. And the reason they're not going to do this is essentially because they don't understand how to do it. And it's not something that is mainstream. It's not, there isn't some big bestseller book on tax sale investing that the whole world's freaking out about. And so what this gives us the opportunity to do is to really, over the next 5, 10 years, help all of our members build wealth through tax sale investing. There's no better opportunity, in my opinion, and there's no better opportunity than now to get involved, especially with some of the things that the county changes and opportunities to be able to buy, over the counter and with online auctions. There's just so much opportunity for us as investors.
Yeah, in fact, I would say that one of the fears that we have is that they just keep making this easier and easier to do. In fact, I mean, yeah, just over the last 10 years, it's become so much easier. It's just over the last 2 years, it's become easier. And our fear is that it's only going to get to be so easy before it starts to catch on. And people will figure out that, hey, this isn't that hard. I can find properties. Look, I can just go to these websites. I can just, once that starts to catch on and people realize that tax sales have just had this stigma attached to them, and the reality is it's the best local investment. It's the best investment they're going to find, and it's local, and it's been right there in front of their face all this time. Uh, Eventually, that's going to catch on, and these properties are going to start selling. There's going to be more competition, but we're not at that point yet. It hasn't happened yet, and like Steve said, in terms of maybe 5 years from now, maybe 10 years from now, at some point in the future, I think it'll get more crowded than it is right now. But as of now, we've got the best opportunities in the world right in front of us. Um, a lease option. Oh, go ahead.
Yeah, a lease option is really kind of a combination of a rental and a seller finance. Essentially, the person is renting the property, they're leasing the property from you with an option after a certain time to be able to buy the property. So, for example, let's say somebody doesn't want to get a mortgage right now, but in a year or a year and a half, 2 years down the line, they want to be able to mortgage the property, or they have some money coming in and they want to be able to pay for it then, or whatever that is. This gives an option for the person to essentially rent the property, lease the property from you, and you essentially set the sales price. But a portion of that payment each month is going to go to their down payment. So that allows them to kind of set that price with you. And so if the property does appreciate, they've already set that lower price or whatever price that is that you guys have determined, and then allows them to a little bit of that payment each month to go towards their down payment. So when they do buy the property, they have some money down on the property already paid towards it. So this is a way for us to be able to find a good buyer that may not got a mortgage on it yet, but maybe wants to get a mortgage on it a year or two down the line, and do a lease option. And maybe during that time you go ahead and go through the quiet title, so when they do buy it, it's perfect, ready to go to market, and you can go ahead and mortgage it for the fuller sales price. So with the lease option, you're going to sell it closer to the market value. Maybe you give them some kind of a discount, but that's kind of the strategy behind the lease option.
There are some real advantages to it as well. Because when you perform a lease option, you're giving that individual the ability to buy it at a set price. That's kind of what's appealing for the person that's buying it, is they have the ability to live in it, rent it for a while, and even have a portion of that going towards some kind of a down payment, so they don't feel like it's all being wasted. But it also gives you the ability to continue to retain ownership of the property essentially because you still have the deed to the property in case they don't pay until a date, the date comes when they're able to buy. And at that point, if you want, depending on how you have it set up, maybe they get financing from another source, which, they pay you in a lump sum amount, which would be great. It gives you some time, and it also gives you the income, and it also gives you full price on the property, which are all great things. It also negates, well, if you're doing a lease option with somebody, you're going to get some time. It's a good way to transition between renting a property and selling a property. For instance, if you had a renter in a property, you decided that really liked, let's say they really liked the property, they fell in love, but they wanted to buy it. A lease option might be a good way to transition between them being a renter and them being a buyer, an owner of the property. And what's nice is that all of these things are completely optional to you, and you can essentially decide which one is going to work best in that situation because you own the property outright. I mean, you have all the options that the bank has, so there's so many different ways that you can make money on it.
Yeah, and with that lease option, most buyers are going to give you a deposit down. So you're going to get a deposit down that'll go ahead and, give you whatever you'd like to, 2, 3, 4 grand, whatever it is. And then essentially that deposit goes toward their down payment and then each month. And if they quit paying or they decide at the end of the year that they don't want to buy the property, they walk away, but you don't have to give them the deposit or anything back. Essentially, that's kind of part of the lease option.
Yeah. Now, um, the last one here that we're talking about is a land lease, and basically you can lease out land, or basically lease out the ability to use the land is really what you're leasing out. So this is something that's typically going to be done with land, and oftentimes just raw land alone, and more often with larger plots of land. It doesn't have to be a large plot of land. I mean, any piece of land that is usable in some way, you'd have the potential to do a land lease with. But it makes the most sense with property with different plots of land that have a lot of use. It's useful for things like recreational land, hunting land, boating, even mining. Really, we actually we found a lot of stuff we found a lot of land. I mean, mining mineral rights. The mineral rights, we've seen those for sale many times. Um,
One thing also to add on that could also be a mobile home lot.
oh yeah.
That may be something I wasn't thinking about, but really this is something that we're going to try this year as well, just kind of from something that happened to my brother, excuse me, this year, is he went elk hunting and he went out to this private piece of land, but essentially the person that took him out there was just leasing the land. He was leasing the hunting rights, and essentially leasing those hunting rights, paid the property owners, uh, you know, property taxes on the property, and gave them some income. And it was kind of an idea because we see a lot of these properties all throughout the country that are large pieces of fishing or hunting or recreation, camping, boating, right there on the water, different things like that, that you could rent out the recreational rights or the hunting rights or the fishing rights to any of these different type of properties. You could do the same thing with mobile home lots. A lot of times you'll see where there's a mobile home on a lot, but maybe that mobile home is old or something like that. You could easily take out that mobile home and have that pad there and lease out that land on a yearly basis to somebody who wants to live on bring in their own mobile home and live on that piece of land for you. So that's something as well that you can look at. But what would be nice about the land lease is, they only really have the right to use the property for that. So if it's for fishing and hunting, that's what they can use the property for. But you still can, have complete ownership of the property, and that's a great way to, especially if you're doing kind of a buy and hold strategy. Say you find a big piece of land somewhere that you think's, Alaska or Minnesota or Michigan or wherever, up in the mountains somewhere where you think is a great place you'd like to build a cabin or something like that. You could essentially sit on that property and lease out the land during that time. That'll help cover all of the expense of the property, but also that property is going to be appreciating in value. So you're going to be making money at the same time.
You know, what's interesting about a land lease is that it creates an opportunity where maybe no other opportunity would be present. In other words, oftentimes you'll find a piece of land that may, by all accounts, seem like there's nothing you could do with it really. Let's say, you find a large piece of land that doesn't seem like it would have any real use or value maybe, but the reality of it is, it's a big chunk of land out there that may have a lot of use in terms of its whatever its natural resources are. So it could be great hunting land, that you could lease out that would have real value, or whatever it is. You could lease out land for lots of things. People rent out or lease out farmland all the time.
Yeah, yeah, that's
Um,
actually, I was just thinking of that, right before you said that, is farmland, even with all these urban gardens that are going up everywhere. What if you were to take a building lot and make it into an urban garden where people could lease out, portions of it to come in and plant their vegetables or whatever. I mean, there's just a lot, you know, as tax sale investors, we want to be creative. We want to, and that's something we can use as our creativity in offering these different types of properties for sale.
yeah, there really are just so many different options out there, and yeah, land leases have been going on for a long time. I think that there are lots of farmers use land leases for their land because they have property taxes that are due on it every year. And maybe they don't want to grow, or maybe it's not even a farmer, but they own the property, and so in other words, they have bills every year that are owed on this property. They need a way to create income. Well, that's a good way to create income for somebody because the farmer's essentially just using the land to grow. So they're actually it's the physical land that they need. It works out perfectly, for them, and it works on lots of tracks. So if you are looking at an area that seems to have a lot of farming going on there, and you've got a large plot of land, then land lease might be a real option for you in terms of something that they would be interested in doing, and it has all the benefits of creating regular income so that you can cover things like property taxes and maintain ownership of the property and still make money on the appreciation of it. So, yeah, the
Yeah,
farmers, people would do with farming land so they could sit on a property for 10 years while it increased in value and an area started to develop until it got to a point where, they were ready to try to develop that land and build on it.
yeah, farmland could be, I mean that really could be something that just an investor could just focus on farmland, and offer it to different farmers on a lease, or even a seller financing option if that was if that was a possibility as well. But a lot of times, it's so expensive to own the land and to farm the land, and so a lot of farmers will, maybe own some land but also lease land as well because it's cheaper for them to be able to lease the land than to try to buy, you know, farmland like that, especially if they have to try to get loans and things like that to be able to do it. And so, that would be another thing under this land lease that an investor could focus on. And one thing with tax sale investing is you're going to want to get your niche, at least to start with. You can always expand into other areas, but it's good to find a specific niche. If that's single family homes, if that's lots, if that's something even like this farmland strategy, you're going to want to kind of focus on a niche like that, and that way you can kind of perfect that niche, and it'll be easier to repeat it and sell the next property and the next property. And then once you understand how to be able to do that, then expand that out into other areas within tax sale investing.
I've been writing this blog post for a while about fears and about the nature of familiarity. And I think for so many of us, I know that we have a lot of members that struggle to take those first steps, that struggle to buy something. And really, what I wanted to say is just that sense of uncertainty that you feel when it comes to investing, that sense of uncertainty is only there because it's something you haven't done before. That's going to be present with anything that you've done for the first time. I think it's the very nature of feeling comfortable. We feel comfortable with things that we're familiar with and things that we've done before. And so the good news about that is that while you may be uncertain that first time you go through, the antidote to that really is action, taking action with it, buying something, and once you've bought something, you're familiar with that process and you're immediately comfortable. And when it comes to finding a niche, that's you find a niche the same way, and that is, you do something, you're comfortable with it, and then you figure out that it works, and you repeat the process. It doesn't have to be as difficult or as complicated as investing seems right now. I mean, right now you've got so many different options. What do you do? Do you pick this? Do you pick that? But the reality is, once you do it once, then you're familiar with that area. Maybe you want to reinvest there. Everything becomes easier the second time around. And so, really, if you can just keep that in mind, that the first time is going to be the hardest. And after that, everything is easier. But at the same time, though, the value of that first action you take, there really, it's valuable. I think we really can't overstate just how important it is to go out there and to do it. Buy something, whether it's a lien, it's a deed. Just go through the process of buying and watch as your fears kind of disappear related to the investment. You realize that it works, and suddenly everything starts to click. Everything starts to feel good about it. So if you haven't bought anything yet, we would encourage you just to go and buy something. Whether it's an over-the-counter lien, there's lots of over-the-counters that are available, whether it's registering for an auction, just trying to buy a cheap deed. Whatever it is, you don't have to spend a lot, because it's mostly the process of going through the motions, that will I think help dissipate that fear.
Yeah, and as long as you're picking up the property at the right price and and there's value in use, it's going to be a good investment. And so, definitely, would recommend going out there, especially as we start this new year. I know a lot of us, I myself set New Year's resolutions and things that I need to do and want to be better this year. And, that's something that if you've set a New Year's resolution and to purchase a property to get involved, then let's go ahead and help you get involved. If we have to help you look at a property and check it out for you before you feel comfortable, send it in to us. So that we can look at it. We want to be able to help each one of you guys go out there and do a deal. And so, over the next 30 days, let's see if we can get as many people as we can. And maybe we can create some type of an event or something like that for people that can do it. Let's see how many different people we can get to do deals.
Yeah, I would love to see that. That's our favorite thing, is when people have success, and just like the student we had here last week that sold the property for $1,000. They made $1,000, and it didn't really take him much of anything. It wasn't a lot of work or effort. There's no reason why that can't be all of our members, why everybody can't be making money with this. Really is that good of an opportunity right now. So I think that's pretty much everything we have to cover here for tonight. But we'll definitely get this recording available and replays available for anybody. And also, we are available all the time for you. We want to make sure that we're able to help you here through the process. So, if you have questions, if you need help with something, don't hesitate to contact us. We're always happy to help. That's what we're here for.
Absolutely. You guys have a great week, and we'll talk to you again next week.
See everybody.